future. We're talking real money.
Oh my gosh, I'm so relieved. I'm so relieved. Hi everybody, welcome to the show. I'm Don, and I'm so relieved because Tom is actually here. We found him wandering the neighborhood, and somebody kindly pointed him to the building in which the studio resides and pushed him through the front door, and he managed to get up the
so
stairs.
Close to being true. I mean, that's
so
actually that's pretty much the way it was.
Yeah.
Key didn't work.
Yeah.
Knocking doesn't work. Calling people doesn't work. Threatening people. Emailing. I'm calling all these people. Like, sorry, no. It's Saturday.
People are screaming out their car windows. Okay. Get off the street, you crazy person!
So thankfully, this gentleman showed up. I guess poor soul like me to work on a Saturday and said, "You got to get in there." I said, "Yeah." Oh, I'll let you in. Yeah. Okay. Thank you.
Because Tom's key didn't work right in the fancy
There's a message there.
1910 electronic lock on the building.
And
I told him,
1960.
I said, yeah, you've got just a key lock to get in. I said, I've got thumbprint identification on my house. Get with it. Yeah. Get with the times.
It's not my building. It's not my building.
Not my building. Not mine either. Hi, everybody. Don here. Tom there. He is here. This is the Talking Real Money radio program and then soon-to-be podcast. It's an all-purpose extravaganza devoted to the most important of all human topics, the creation of the wealth you need to buy the things you want and the things you need, and keeping it. And therein lies the tricky part. We're going to talk about that. We're going to talk about building wealth. We're going to talk about the stupidity that is that is the world of money sometimes. And we are going to talk about the greatest animal battle of all time, just completed. And ladies and gentlemen, finally, after the longest stretch since 1948, after the bell, the bull emerges victorious. Ding, 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 ding.
Is it a bull or a cow? I got to ask. It
looks like a bull.
Just plain bull.
Well,
okay. Smells like a bull, walks like a bull.
Depends on the source of the information, Tom.
All right, enough silliness. We're talking, of course, about and you should be so happy to hear this, new bull market. That means stocks. This is the S&P 500, by the way. The S&P 500 has now gone up more than 20% from its previous low, which was last October. And as Don said, this is the longest, it's hard to believe, bear.
Yeah, is
since,
it? Well, I guess in terms of length, I mean, think about 08. 08 was bad, but it was quick.
Much deeper. Yeah, much deeper.
But, it's funny because 01, that one lasted kind of a while, it felt like. But, I don't.
But it must not be the 20%. Yeah.
So congratulations are in order. Congratulations are in order for all of you. Congratulations. I mean, look at you. Look at what you did. Those of you who didn't panic and sell and sit in cash right now. Those of you who are regretting panicking and selling and sitting in cash for the past few months. Look how you did. You made it. I'm so proud of all of you. And so, Tom, let's share some of those numbers that we really don't care about.
No more cock and bull stories. Yeah, let's get to the facts here.
Tom Cock and the bull market. Oh, wow, cock and bull story.
92% of the time. I'm trying to give you the good news here. Yeah. 92% of the time, the Standard & Poor's rises when a new bull market begins in the next 12 months. Let me say that again. 9 out of 10 times. So if you're a market timer or you're just looking for a reason to be back in stocks, wow. Now here, well, we'll go.
No, you got a second. Facts. Go ahead. Give me one more. Give me one more. I got time.
Here's one more. It won't be a linear rise.
Oh, you mean it's going to be bumpy?
It's not going to go straight.
Yeah. It can be a bumpy ride. 855-935-TALK is our number. Call.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Hey, everybody, I'm Don McDonald. Over there is Tom Cock, I'm sorry.
No cock and bull stories today.
Oh, yeah. Today we're talking bull. We're talking bull. Usually it's the no bull show, but this is all bull all the time, at least in this hour. Well, some bull. Not all bull all the time. 855-935-TALK is our phone number, 855-935-8255. And if there's one thing we know about the market, whether it's a bull or a bear market, it's the fact that it never moves in a straight line.
If it did, then you wouldn't make 10% a year in the past, right? You wouldn't have made 10% because there's no risk to that, right? You got to have the ups and the downs. So yeah, and then here's my favorite one, Don. I read this last night from a very well-known analyst. He says that the next 12-month returns will be dependent on many factors. Those include interest rates, corporate earnings, and economic growth.
What a surprise! You mean what the market does depends on what the market does? Huh.
Yeah, interest rates, corporate earnings, and economic growth. Yeah.
Well, sure glad he shared that with us because I would not have known that stuff without that. Without that, but this
that is deep, man.
This bull is deep,
and that's what it is. Yeah.
Well, excuse me. Something interesting from Morningstar though about the makeup of this bull market, because the bull market really has existed now mostly in 2023, the first half of 2020. We're almost done with the first half of 2023. And historically, on average, this is large to mid-cap stocks, the bulk of the market, large to mid-cap U.S. stocks. On average,
in terms of value, in terms of the
right, in terms of these are the biggest companies. These aren't the little ones.
Yep.
On average, 5% of the market's return can be attributed to the 10 largest companies in the stock market. Does that make sense?
So a small percentage of the growth comes from the biggest companies.
Right.
Has.
In 2020, that rose to 37% of the return of the market attributable to the 10 largest stocks. In 2023,
and you know which ones those were.
Oh, I can tell you. Yeah. In 2023, those 10 stocks, which include Apple, now Nvidia, Microsoft, Google, Amazon, the Tesla, Meta, so far those 10 stocks, just those 10 stocks, heavily weighted.
How much?
Heavily weighted toward technology. Heavily weighted toward technology. They account for 97% of this year's return. 90.
So it's been what we call narrow rally.
No kidding. The narrowest in history.
So does that make you nervous? Does that make
no?
You?
No. There's a lesson in there. Because we're now talking about an index that is made up of thousands of companies. This is not the S&P. When you throw all the large and all the mids in there, you're talking a couple thousand companies, 1,500, 2,000. I think it's 2,000. So you're talking a couple thousand companies. And when all of the return is attributable to 10 stocks, what are the odds that going forward, it'll be, one, the same 10 stocks, and two, whatever stocks it ends up being, that you're going to be in them, unless you're in all of them.
This gets back to the lesson. Thank you, Professor. Diversification, buying things that may be out of favor, not just the things that have done well, and not chasing the hot investments, which today have been technology and certainly artificial intelligence. That has been the growth part of the market. So thank you. That's
it's funny, the only ones that aren't true technology stocks, there are only three. There are really only three. And that's Visa, United Healthcare,
and
Berkshire Hathaway, B.
Yeah. Those are the rest of them. Yeah, you have to say they're tech. I love how they also throw, like Amazon into the AI mix.
Well, I don't think it's in the AI, but I do think it's in tech because Amazon.
Say it is.
Amazon is almost all tech. I mean, really, Amazon has got this down to where its inventory's not their big game anymore. They're using other people's inventory. They're just making profits on anybody selling anything to anybody, anywhere, anytime. That's a lot of innies. Wow. So this just points out the fact that you can't. You can go back and say, in hindsight. Oh gosh. Okay. Speaking of hindsight, who's the queen of hindsight in my family? You know her.
I believe
you know her. You love her.
Debbie.
She told me yesterday. She goes, I remember 10 years ago, I was looking at buying NVIDIA. I went, you did?
Oh, yeah.
Oh,
sure.
no. She goes, we would have been so rich. And I said, you were not looking at NVIDIA. And, of course, she blames me all the time. She blames me. She had Apple when Steve Jobs was alive.
I do remember the Apple store.
She had Apple when Steve was alive. And I said, oh, my God, he died. This can't be good for Apple. I'm not a market timer, but I said, if I would not, because this was when I believed in broad diversification. She did not.
Yeah.
No. And she sold it.
I don't know that she still does.
I don't know. But she sold it. This is the problem. You cannot control spouses. She's mad at. She is still mad at me about that. She's still.
Let's bring her on. Let's find out what else.
You made me sell Apple. She doesn't sound like that. She has a much higher voice than that. Much. You made me sell it. Look at how rich we would have been. Please, we can't.
Okay, yeah. And what
help
would
me out here?
What would you be doing different? Well, okay, number one, what would you be doing differently if you were rich?
Yeah, not much.
Yeah, see, that's the
not
thing.
much.
Like, not really.
Not really, because
no. Keep doing
because
my job.
if I was rich, I still wouldn't think that a lay flat seat for 8 hours in the front of the plane is worth $10,000. I still would not think that.
I got to come clean on that one, but okay. Yeah. That was a 14.5-hour flight.
14 and a half. I'm starting to see the benefit, but at 8, I can crank back the premium economy seat, which was a fraction of that.
Wait, you can drop the seat back?
No, it just goes backward, like in recline position.
I don't think you can do that anymore.
Yes, you can.
That's poor etiquette. I think they say now not to ever do that on a plane.
No, it's not true.
You're one of those guys.
I'm one of those people. But I look back to see if somebody's got their laptop open or something.
I see.
I'm one of those guys. That is part of the deal. Unless you're on Spirit, where they don't go back, or Allegiant, where there's like sitting in a canvas sling.
You're lucky enough just to get on. No, there was a piece in the journal.
You know what's going to be like?
That said the etiquette says don't do that anymore. So
soon planes are going to be like the holds of the British warships, where they're just going to hang you in hammocks at various levels and.
Sir, your time is up. You got to go walk around for 6 hours now.
Okay, 855-935-TALK. We have drifted off the subject, but the subject is money, and your calls are always invited to get us back on track and to get us back in the process of truly helping you, because we don't know what to do unless you call us.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Hello and welcome back to the show where we try to help you manage your dough better than before. 855-935-TALK is our phone number. I'm Don. That's Tom. You can call us. We love to help you out. 855-935-TALK, 855-935-8255. Now, I am a big fan of boring investing. I just love boring investing because there was a time when I did, try more dangerous things. I tried things like options and even buying and trying to flip real estate for a little while. That made me a couple of bucks, but it turns out it was really hard work. I mean, there's like work involved. But, some people have these little side gigs where they make big bucks. And Tom has started a new one where he's making these huge, huge profits on an investment. What was the profit you made on your latest investment there, Tom?
It wasn't me. I got to be clear on this because you mentioned your spouse. I got to mention mine here. This was her idea. She's tried this before, I got to say, where she buys more tickets to a hot entertainment event and then tries to sell them later at a higher price.
Hold on. Before you implicate yourself in as an accessory to a possible crime, how does Washington feel about ticket scalping?
I don't know.
Is it illegal? I always want to protect you guys just in case.
Probably.
Because that's, yeah.
All right, well, if they come knocking, I'm out. I got a swamp behind me.
In fact, I'm just looking.
Right
they call it the Taylor Swift Consumer Protection Act in Washington State.
There are people that the Taylor fans are really mad at people like my wife who did this kind of thing. But she did. And
oh, God.
No, they are.
Now,
they're running around the country.
Think about it. Now you're going to ruin our ratings on Apple Podcasts because we got slammed. If we even say anything political, now we're going to get slammed by the Taylor Swift people.
But it wasn't me. It was her.
It wasn't me.
Want me to give her a number out? They can call her. I'm
so
just
how much
raising it as
how
an
much
example.
did your family make?
She invested, I think it was $812 for 2 tickets at Lumen Field. Well, she actually bought 4, 2 of which she always intended to keep so that she and my daughter can go see the concert.
Yeah.
The other 2, she put up for sale a while back. She had to lower the price once, but she netted out almost $2,000 after all the fees, after all the stuff, on an $800 investment.
That's better than NVIDIA,
which is
isn't
far
it?
better. Yeah, I think it's pretty close. It's better than the individual REIT I own. It's better
anything's
than
going to
my
be better than the REIT
portfolio that's up about 4%, 4% year to date. So seems who cares about that when I can make the big money? So.
Yeah, I have to say, my daughter did the same thing unintentionally in New York. She bought 2 tickets to a Jonas Brothers concert from somebody, and then the friend didn't go, so she resold the Jonas Brothers ticket, went to see the concert basically for free, and walked away with some money in her pocket. So
yeah,
I had never thought of that as an investment strategy, but look at that. We have a unique investment strategy shared with you on Talking Real Money. Ticket scale.
And if you're with the authorities, call me. I will give you her number. Take it up with her. Wait, I profited from that exchange. That's bad.
Yeah,
all right.
Yeah, you didn't directly
don't call
profit
me, please, really.
855-935-TALK. So if you have a question about ticket scalping, if you
or a unique profit opportunity,
right, or something you want to share, or you have an issue that really is pertinent. You have an investment you're thinking about making. You've got one you just made, and maybe we can help you get out if it's not good. You may have a messy portfolio, and you'd like somebody to just kind of say, it's good, or needs some help. Just call us anytime. Actually, you can call us 24/7. You can. But if you call us other than when we're on the air, which is 3 to 5 Eastern, noon to 2 Pacific, you can leave the message. But if you call us during those times when we're live, like we are now, we get a conversation. 855-935-TALK, 855-935-8255, because the things we want to talk about really are the things that are important to you.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
I just discovered that there may have been some phone issues earlier in the show. So if you tried to call, I just noticed a couple of things went to voicemail, which it shouldn't do unless the calls ring out for some sort of a problem. So if you tried calling earlier in this hour, give us a call again at 855-935-TALK, 855-935-8255. Welcome back to Talking Real Money. I am one of your hosts. I'm Don. That is Tom. This is the show that'll help you deal with your dough. And now it's time for us to go and talk with Ryan. Hello, Ryan. Welcome to the program.
Hey, guys. How's it going?
Good. Thanks.
I have what I think is going to be an easy question for you. I'm trying to construct a portfolio using Fidelity index funds.
Mm-hmm.
And I'm kind of struggling with the international part of it. They don't have index funds for international small cap and international small cap value. And so I'm wondering if you guys have any recommendations for the international component.
Let me first ask you.
Go ahead.
Okay. Why are you stuck on Fidelity's
That's what I was
index funds?
Yep. Yeah. So my wife's retirement plan, her 401ks are the provider is Fidelity.
Okay.
And so I go through they have like a brokerage link thing where you can buy whatever you want, but if you want it to be automatic, you can only use Fidelity funds.
Oh, got it. Now, but here's
otherwise the cash would have to build up. Yeah.
Yeah, but here's something that I think people neglect. Do you invest anywhere else? Do you have any other investments outside of her 401k?
Yeah, I have a 401k through my employer.
And what do you get to use?
And we also have ours is with Voya.
Oh.
And so that's a whole nother.
Ooh.
Yeah.
Oh. Ooh.
That's the second hour. Yeah, call us back next hour for that.
Do you have a brokerage account somewhere?
Back for that one. We have. We both have Roth IRAs as well.
Oh, hey!
Yeah, I do have a brokerage.
You know where I'm going, right, Tom?
Yes, I do know.
I'm just gonna lob that little softball your way. Go ahead, catch it.
No, I mean, so here's what we would do. Then we would own the total U.S., the total international, and then whatever bond component you want to have in that portfolio
in the
with
401k
the funds.
Yeah,
in the 401k. Then outside of that, where in the Roth you could use any fund, right? There you could get the international small cap value. There's some great index funds you could buy there.
Avantis.
Yeah, exactly.
You don't want funds either. Well, you
class.
do. It doesn't matter. It doesn't really matter. But the Avantis, they tend to be a little.
ETFs.
Pardon?
Sorry, I can use ETFs and whatever in those as well.
I would.
I'm going to get you a ticker.
Yeah, I think the
AVUV. AVUV.
That's not international.
Okay.
Oh no, not AVUV. I'm sorry. There's an
He wants
AVI.
international.
Yeah, Morningstar.
We'll get you a ticker. What else did you want to know, Ryan?
Well, I think I'm not sure there's enough money in those Roth IRAs to kind of make up that component of it.
No, but some. It's AVDV.
That was
AVDV.
AVDV.
Avantis's International Small Cap Value Exchange Traded Fund. AVDV. That's where I would go.
Yeah. And that's all right, really. Do you have, despite the fact that you're with Voya, do you have a small cap option at all with Voya? A small cap international?
Yes, there's a. It's just not an international. That's right.
Oh no! But do you have a small international with Voya? No.
No. There's no small international.
Yeah. No, I'm not surprised to hear that. That's a hard asset class to buy as an index. Really, it is. The proprietors that we would trust there would be the aforementioned Avantis and also dimensional funds, which is very hard to get oftentimes in retirement plans. It's harder to find international small cap value as an asset class, as important as it is when it comes to having an index. You can buy actively because all kinds of people actively managing that asset class. But that's what I would do, even if, Ryan, it didn't make up the percentage you wanted. I would still own it in those Roth IRAs. And then if I had money in the brokerage account, I would still try to make up the difference there as well. I think that's your very best option.
Yeah, we concur. And then, over time, build that up in your Roth. But this is probably the best you can do right now. Thanks for your call. We really appreciate it. 855-935-TALK is our phone number. 855-935-8255.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
All right. Welcome back to your little get-together with us where we talk about this most important thing, your money. 855-935-TALK is our phone number, 855-935-8255. By far, the biggest mutual fund family in America is Vanguard. They're huge. They're ginormous. And I think I can be I get a little credit for that. I think I've sent them
I think so.
billions over my 35-year career doing financial talk radio. Tens of billions. I know that. I know I have, because they actually used to count how much I sent them. And they said, "Oh, dude, you're in the billions." And this was in the 90s. But they were great back then. They just didn't, I can't remember under the Bogle control where they really messed up. Yesterday, even on the podcast, we had a woman who called and said, Vanguard's had their problems, but they're really good to me. And they have been good to most people. I have to give them that. Although the stumbles have really mounted with Vanguard to the point where they even got fined. Right, Tom?
Yeah, FINRA ordered Vanguard to pay $800,000 for issuing misleading account statements to money market customers and then failing to respond to them when they indicated something was wrong. Now, this goes back to 2019 to November 2019 to September 2020. So what is that, 10 months? They estimated the annual yield and annual income for 9 money market funds on about 8.5 million account statements. A lot of numbers there. But it's pretty big. That's a lot of statements that they messed up. Vanguard said it was due to a technical issue. Okay. I mean, there wasn't anybody sitting around with a calculator who made a mistake, apparently. But here's the thing.
I don't think they do that anymore, Tom.
I guess I'm the only guy still doing that. But here's the thing. People wrote them and said this was wrong. And what did Vanguard do? They tried to bury it. I mean, this is like any mistake you make. When you make a mistake, you need to put your hand up and say, I did that wrong.
Sorry, let me fix that.
It was a lot of people. So, I mean, and again, so when FINRA got a hold of it, the fine was not only issued for misleading the customer statements, but failing to follow up on customer warnings that something was wrong. That's when I struggle, because as an organization, everybody makes mistakes, right? I mean, this is a big mistake, right? That's a lot of people.
Yeah, it's a lot of
money.
people. I mean, it's little tiny amounts, but in aggregate, it adds up.
It does add up. And the point of the matter is then you say, we got it wrong, we're fixing it, et cetera, instead of trying to bury it. And so it's a black mark. It's not huge. It doesn't mean I'd go pull all my money. It doesn't mean I wouldn't use them. But
But it does point to a corporate culture that has slackened, I think is the best term. They're not as taut as they used to be. They're not on top of everything. And they're big, but they've gotten so big, too.
They've gotten, and especially people forget the last 10 to 15 years, most of their huge growth has happened. It has been in other words, I think that was in the Eric Barshall-Lunas book about how much of the growth at Vanguard has come in the last 15 years. An astounding amount. I don't think they've kept up with it, because we know that from a customer service standpoint. And they also, they initiated the Vanguard advisor program, where for 0.3% a year you get an advisor. The reviews of that have not been very good.
Yeah, you're right. They started some things they shouldn't. And in fact, they even got into some alternative investing.
Stuff like that.
They tried to get outside of their comfort zone. They moved out of their, they should, and this is a problem. There actually is a lesson here for a lot of firms. Do what you do well.
Keep doing it.
And don't try to change just for the sake of change. If it isn't something that is doing something better, you don't just do something because your customer says, "Oh, I want this too." No, if it's not better, if it's not something you can comfortably do at your highest quality level, then don't do it.
Yeah, but Vanguard's always had this conflict, right? Because they're known for index funds, but at the same time, they still have actively managed mutual funds where people are picking stocks, and they're cheaper than other actively. I'll give them that. But they're known for index funds. They should stick with index funds. You correctly point out that they decided a couple of years ago to get into like a fund that's where they're going to offer like private equity stuff. I mean, all this.
Because their customers are demanding it. No, he would be. Well, he would be very, very, very down on that. But I really think if Vanguard would be smart to get rid of all the active and all the fancy and go to just indexing, sell off the other stuff. 855-935-TALK, that's our phone number. And George, thanks for calling. Welcome to Talking Real Money.
Hi, Don and Tom. My question is, I'm calling for a friend of mine who has an annuity. It's a fixed annuity at TIA. She's had it for about 20 years, and it pays real good, or at least overall through the years it's been paying 3%. But if she needs any money, it's trying to like pulling teeth trying to get money. You got to fill out a form, send it in the mail, and wait and wait and wait. Do you have any suggestions of where she might move this to?
Oh,
wow, that's a good question.
Well, the problem is
like a transfer. It's
the
same thing you're going to face.
Yeah, she's going to,
because they're better annuities, but I don't know that you can fix this aspect of the sort of latency between when you need the money and when you get it.
They all annuities tend to have that problem.
Yeah, that's what I'm saying. I don't know where that would be better. Yeah, no, I mean that's kind of it's a great question because
it's part of the beast.
If your money's in a brokerage account, you can make a trade. You can get the money within 2 or 3 days. In an annuity, I've heard sometimes somebody told me once. Yeah, right. Somebody told me once it took a month for them to get money from their annuity. I thought, good Lord, that's.
Well, they don't.
I mean, if you have a
insurance
plan,
companies love taking your money. They do not like giving it back.
Oh, you want a return?
Oh, yeah.
Yeah.
I mean, that's why they have those big honkin' surrender charges. And that's going to be the problem, is that if you do a 1035 exchange into another annuity, you may end up with a little bit better rate, but you're going to end up with a longer period over which you can't take out more than 10% per year without suffering a huge surrender charge. This is a case. How much money's in this annuity?
About $48,000. It's a fixed annuity. It's
a fixed annuity. I get that. And so she's taking money out of that $48,000 to live on?
No, she just needs it once in a while. If she needs a new roof or something like that. The original amount was $27,000. So there's about $20,000 of that's taxable.
Right, exactly. So
before anything else.
Yeah, that's a reason not to move it unless she's in a very low bracket. If she's in a low bracket, then you could take it because eventually those taxes have to be paid.
Yep.
So if she's in a low bracket, you could get a little more out than she normally takes out and then put that in some sort of a short-term CD or a high-yield savings account for those emergency needs down the road. So take, if she normally, it's like I have to take $5,000 out to fix the air conditioner. Take 10, take 12, and put that in some sort of a savings account for those future emergencies so she doesn't get stuck waiting when something really bad happens. That's the only thing I can really think of. And eventually, with taxes, they eventually have to be paid anyway. So you bite the bullet now or you bite it later. 855-935-TALK. Call.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Now, we encourage you to call us here on the show because we like to talk with you. Have a one-on-one on 1,000 or 40,000 conversation. But we can only do a few minutes because it's a radio show / podcast. However, we really, truly, 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 really want to help everybody. And Tom is a big fan of having conversations with you about your portfolio, about your financial future. And so he takes... about 3 calls maybe on a Saturday?
Every Saturday morning. Yep.
Every Saturday morning. And I misspoke on the podcast the other day. I said until 10. It's not. Oh, we're out of time. Go to TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appellate Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. To keep the lawyers happy.